Hey, how are you? We are now in the second part of the series of our discussion on business use of the vehicle and its tax deductions. In the first part, we saw what is allowed as a business use and what is not allowed as a business use, especially commuting between home to office and office to home is not considered as a business use. In that first part, we also discussed that if you use your vehicle less than 50% for business, you have to use the simplified method. You have to take 57.5 cents per business mile used. But if you have the business use more than 50%, then you can go for actual expenses also. There were a lot of actual expense plus lease or depreciation and interest that you can deduct. One clarification, if you're using more than 50%, then you have the actual expense option and you also have the 57.5 cents option. You can do either of the two. Whichever is higher, whichever is more beneficial to you, whichever gives you more deduction, you can do that. If your actual expenses are higher, you can do the actual expense method. And if your mileage is very high, you can take the 57.5 cents per mile option also. If it is more than 50%, you have both the options. If it is less than 50%, you only have to use the 57.5 cents option. You don't have the second option. Okay. So that's a clarification on part one. Let us go to part two now. The dimension that we are going to discuss today is going to be depreciation. Okay. Remember, with all the expenses, you can also claim depreciation deduction for the vehicle. Let us see how that depreciation is calculated. When it comes to depreciating the vehicle, the depreciation is calculated in two sets. One is if the vehicle is a SUV and it is of gross weight more than 6,000 pounds, but less than 14,000 pounds. That is one category, that is one set of vehicles. Those are depreciated differently. Okay, what is that set? What is that category? It is SUV. It has to be a SUV. It cannot be a car. It cannot be a van. It cannot be a pickup truck. It has to be a SUV. And then that SUV should weigh, gross weight should be more than 6,000 pounds and less than 14,000 pounds. Gross weight. Gross weight is important because usually the car dealers give you curb weight, and curb weight is less than the gross weight. So you have to ask for, or you have to look for gross weight, not the curb weight. Okay. So number one, it should be SUV. And number two, it should weigh more than 6,000 pounds, but less than 14,000 pounds. If that is the vehicle you're talking about, if that is the vehicle you have bought, or if that is the vehicle you are planning to buy, you're planning to own, okay, then you can depreciate that vehicle 100%. You can fully depreciate that vehicle in the first year. You can fully depreciate that vehicle in the first year. Okay. So for example, I'm talking about, let's say we are talking about a Range Rover, Land Rover. Okay. And let us assume that I'm buying a new one, or let's assume I'm buying a used one, because used one is allowed too. So I'm buying a Range Rover, Land Rover, and I inquire, I go to edmunds.com, or I call the car dealers, I inquire about what is the gross weight of that vehicle. And the gross weight of that vehicle is, let us say, 6,300 pounds. So it is a SUV and it is more than 6,000 pounds in weight. Okay. Now, if I buy this vehicle, for example, for $60,000, okay, I can write off the whole $60,000 from my business in the first year itself. So from my income, I can depreciate the whole 60,000, write off the whole 60,000, and I can get $60,000 worth of deduction. Okay. Whether I buy it new, whether I buy it used, that doesn't matter. If it is a SUV, more than 6,000 pounds, I can write it off completely in the first year itself. Okay. I have to be mindful about the personal use always. If I'm not using this SUV 100% for business use, but I'm using 20% for personal, 25% for personal, or I plan to use 25% for personal in general, right? I should always be mindful of that. And I should take that 25%, 20% out, which is for personal use, which I'm going to use for personal use, and only depreciate the remaining 80 or 75% of the value, because that is my business use of the vehicle. Okay. But you get the gist of it. For SUV weighing more than 6,000 pounds, new or old, I should take the personal part out, but I can write off the whole 100% in the very first year. With my clients, I am also very mindful of any SUVs that are exorbitantly uh, expensive, that are very flamboyant, and say it's a Bentley SUV costing $200,000, or if it's a Tesla Model X, which is also SUV more than 6,000 pounds, but it costs say $130,000. When it comes to this exorbitant kind of money that they are spending on SUVs, whether it's Bentley Bentayga or Tesla Model X or any expensive SUVs, I'm very mindful to make sure that I definitely take out some portion as personal use and only depreciate maybe 60,000 or 70,000, or push come to shove, I would go up to a max of say 75,000 as business use and not depreciate the remaining. And I will do that just for the sake of being safe. I would do that in good faith. I would do that as a safe harbor. And in next couple of videos, I'll explain you what is my logic behind doing all this. But if it's a SUV and it weighs more than 6,000 pounds, I can depreciate it fully in the first year, new or old. Take some personal part out. Also, if it is very, very expensive SUV, you might want to play safe. In good faith, do the safe harbor and not depreciate the whole thing. I would suggest go up to 60, 65, 70, maximum 75,000, and that much is what you should write off for your SUV. That's my suggestion. But again, from case to case, from practice to practice, things could differ. So we can always discuss it on one-on-one basis. This is a general idea of how it works. Okay. Now, this is one category of vehicle, SUV weighing more than 6,000 pounds. If it is not a SUV, okay, if it is a car, or if it is a van, or if it is a pickup truck, okay, or even if it is a SUV, but it is not between that 6,000 and 14,000 pound range, and it is less than 6,000 pounds in gross weight or more than 14,000 pounds in gross weight, right? For all other vehicles, you cannot depreciate that vehicle fully in the first year. How would you depreciate? If you see on your screen, in the first year, you can depreciate $18,100 out of that cost. $18,100 in the first year. But then you can depreciate also $16,100 in the second year, then again $9,700 in the third year, and then again $5,760 for the fourth, fifth, sixth, seventh, eighth year, till the value of that whole vehicle doesn't get exhausted. Okay. So SUV and more than 6,000 pounds but less than 14,000 is one category. But other than SUVs or other than these weight range, everything falls in a second category, where even though you cannot write off everything in the first year itself, you can still write it off over a period of number of years. 18,100 in first year, then 16,100, then 9,700, then 5,760 till the value is exhausted, right? This is how the depreciation is calculated. This is the second dimension we spoke about today. And we will continue this series. In the next video, we will touch base on another aspect of the business use of vehicle. Till then, take care, stay tuned, and I'll see you soon. Take care. Bye-bye.